Now let's go ahead and take on an example on accounting standard 26 on intangible assets. It's a CA final examination question 2015. But now accounting standard 26 not there in CA final but very much there in CA inter. So guys, follow this question, a very important sum from examination standpoint. Let's go through this question. This can come for 10 marks in examination. Yes.
Yes, sir. During the financial year 2014-15, Power Limited had the following transactions. Now, on 1st April 2014, Power Limited purchased a new asset of Dark Limited for rupees 11,40,000.
It is given that you represent Power Limited and your company purchased another company, that is the net assets of Dark Limited for rupees 11,40,000. That is a net assets 11,40,000. Okay, that is net assets for 11,40,000 being the purchase consideration. Then
the fair value of Dark Limited's identifiable net asset was 8,50,000.
So basically you paid rupees 2,90,000 extra. You purchased rupees 8,50,000 worth of net assets, the fair value. But how much you paid for the net assets? 11,40,000. Right?
Yes, sir.
That means your company paid rupees 2,90,000 extra, nothing but the goodwill that arose on acquisition. And this particular point is nothing but the goodwill arising on purchase of another company. What do you guys learn? Accounting standard 14 on accounting for amalgamations. Is that fine? So 2,90,000 is supposed to be goodwill. Please remember, goodwill does not come under accounting standard 26. Is that clear?
Yes, sir.
It is accounting standard 14 says very clearly. If you refer to, I said there's something called paragraphs in accounting standard, like I have section numbers in law, right? So if you refer to para 37 of the text, AS 14, you'll find this theory relating to goodwill. Now, whenever the consideration paid is greater than the net assets acquired, the excess is labeled as what? Goodwill. Got it?
Yes, sir.
2,90,000. Next.
Power Limited is of the view that due to popularity of Dark Limited's product, the life of the goodwill is 10 years.
How many years?
10 years.
10 years given. But AS 14 says generally it's taken as 5 years unless a longer period can be justified. But justified. Why? Popularity of Dark Limited. You're going to enjoy their goodwill, right? After acquisition. Next.
Number 2. On 1st May 2014, Power Limited purchased a franchisee to operate transport service from the government of rupees 12 lakh and at an annual fee of 4% of transport revenues.
Yes, this happens normally with McD. You can buy the franchise. You can use their logo and run the shop in Chennai, right? Like that, you got the franchise from the government, right? And how much you pay the lump sum? You paid rupees 12 lakh for the franchise. Franchise is not a big deal for you people because you see a lot of IPL franchise, got it? All your Sunrisers and Chennai Super Kings, all these are franchise where these teams have to pay a lump sum amount to BCCI, right?
Yes.
So over here, rupees 12 lakh is the amount paid for the franchise. And for how many years? Have they given the number of years?
Yes.
5 years.
The franchise expires after 5 years.
5 years.
Transport revenue were 1,20,000 for the financial year 2014-15. Power Limited projects future revenue of rupees 2,40,000 in 2015-16 and 3,50,000 per annum for 3 years thereafter.
You saw that apart from you paying rupees 12 lakh for the franchise, you got to pay a 4% royalty, that is a 4% license fee. That is the amount you have to pay every year is 4% on the revenue that you want to earn from the sale of tickets, right? Now, what is the revenue for the first year? 1,20,000 is the revenue earned. On that, what is 4%? Is 4,800 you have to pay. That is a royalty you have to pay, or the license fee, right?
Yes,
Next.
sir. Number 3, on 5th July 2014,
Mm-hmm.
Power Limited was granted a patent that has been applied for by Dark Limited.
You saw Dark Limited apply for the patent. Because you bought a Dark Limited, now the patent will be given to you. Yes or no? You are the new owner
Yes, sir.
of this patent. It was applied by Dark because you purchased a Dark Limited on 1st April itself. In July, the patent will be given to you people. Who are you? Power Limited.
Yes, sir. So during 14-15, Power Limited incurred legal cost of rupees 1,10,000 to register the patent and an additional 3 lakh rupees to successfully prosecute a patent infringement suit against its competitor.
Okay, basically you had to pay rupees 1,10,000 to register the patent in your name, and also you had to incur rupees 3 lakh legal cost to fight a competitor. And here the assumption, without this 3 lakh, you will not be allowed to use the patent. Is that fine? Because your competitor will not allow you to use.
Yes.
So therefore, you had to pay 1,10,000 to register the intangible asset, the patent. Also incur another 3 lakh legal cost to make it operational so that you can use the intangible asset. You know how much? 4,10,000 is a cost of this intangible asset hyphen patent. Is that fine?
Yes,
Next.
sir. So Power Limited expects a patent's economic life to be 10 years.
How many years? 10 years life for this patent.
Power Limited follows an accounting policy to amortize all intangible assets on straight line basis
On straight line basis.
over a maximum period permitted by accounting standard, taking a full year amortization in the year of acquisition.
That means what? Doesn't matter whether you bought the patent in July
or May
or the franchise in the month of May, doesn't matter. You can claim a full year's amortization, means depreciation on these intangible assets. Is that fine? In the year of acquisition. So don't bother about the time factor. Is that clear?
Yes, sir.
Now let us go ahead and what is the question asked?
Prepare a schedule showing the intangible section in Power Limited balance sheet at 31st March 2015, and B, a schedule showing related expenses that would appear in the statement of profit and loss of Power Limited for 2014 and 15.
So basically show the balance sheet extract and a profit and loss statement extract. Okay, not a full-fledged balance sheet or P&L. Got it?
Yes.
Now, how do you go about this example? First, let us see the working notes. Refer to working note. Go to the workings, Renuka.
Yes, sir.
So, what is the first working?
So the first
That
working
is regarding
cash paid
goodwill.
for assets. Yeah.
That is 11,40,000 amount paid for rupees 8,50,000 worth of net assets. Now, what is the extra I paid, or rather your company paid 2,90,000. You are Power Limited, okay? And you all know this from the chapter Accounting Standard 14, Accounting for Amalgamations. Any doubts, please refer to para 37. Para 37 of AS 14. They'll say very clearly where the consideration paid is greater than the net assets acquired, the excess will be labeled as, they won't say labeled, it will be treated as goodwill. Is that fine?
Yes, sir.
And as per AS 14, remember if you refer to para 38, they'll say that amortize a goodwill across how many years? 5 years, unless a longer period more than 5 years can be justified. Here it is justified. Why? Because a dark element is very popular, you will enjoy their goodwill for how many years? For 10 years. Is that fine?
Yes, sir.
Got it? So 2,90,000 is your goodwill. Is that clear?
Yes, sir.
Then
So the less amortization 29,000.
how 2,90,000 by 10 years, how much? 29,000 for the first year, 14, 15. And net amount is 2,61,000. Next.
Next for franchise,
Mm-hmm.
12 lakh rupees, less amortization over 5 years, 2,40,000. Then the balance is 9,60,000.
Got it. 12 lakh is the amount, you will lump sum amount you had to pay to the government. Rupees 12 lakh to get the franchise. And that minus 2,40,000. How that 2,40,000? 12 lakh by 5 years life. So 9,60,000 is a WDV of this intangible asset. Next.
Next is a patent, 1,10,000 plus 3 lakh, 4,10,000.
Minus 41,000, nothing but 4,10,000 by 10 years life for this patent, right?
Yes, sir.
So 3,69,000 is a WDV of this intangible asset. Also, there's a working for the expense you have to incur every year. Remember, you promised to pay 4% of the revenue collection. So 4% of 1,20,000, how much? Is 4,800. Is that clear?
Yes.
Have they shown a working for that?
No, that
No,
is
they
shown
haven't.
in the
That's
part
shown
of the notes document.
as a notes. Okay. Now, these are the three workings, guys, you copy. Let's go to the notes now. Notes relating to balance sheet, okay, and notes relating to profit and loss statement. And then we shall go through the balance sheet and profit and loss extract. Yes. Notes.
Yes, sir. Notes to accounts. Number 1, intangible assets. Goodwill, working note number 1, 2,61,000.
61,000.
Franchise working note number 2, 9,60,000.
Then-
And patent working note number 3, 3,69,000.
Adding up all the three.
15,90,000 intangible.
That is the amount to be shown in your balance sheet under non-current assets, intangible assets. Next.
Then amortization expenses. Goodwill 29,000.
29,000.
Franchise 2,40,000. And patent 41,000.
Adding all the three.
3,10,000.
That is a total amount of depreciation / amortization expense, right?
Yes, sir.
Now, Renuka, I have a doubt. Can I use the word depreciation for intangible asset?
No, amortization.
We use the word amortization. That's it, right?
Yeah.
But it's as good as what? Depreciation.
Depreciation.
Fine.
Yeah.
And then what is the next item?
Other expense.
Nothing but the royalty you have to pay. That is 4% on 1,20,000. What? 4,800. Is that fine?
Yeah.
So what I do with the projected revenue? That is irrelevant. Because you have been asked to make a balance sheet and P&L only for the year.
14, 15.
That is balance sheet as on 31/3/15 and P&L for the year ended 31/3/15. Is that fine?
Yes, sir.
Now let's go through the balance sheet extract. Yes.
Yes, sir. Balance sheet extract relating to intangible assets, under that non-current assets, under intangible asset, note number 1, 15,90,000.
15,90,000 rupees, and that is all. Now we go to statement of P&L. Under the revenue,
Revenue from operations 1,20,000.
revenue from operation includes 1,20,000, right?
Yeah.
Also, and then the total we don't know.
Yeah.
Leave it. XXX.
Then expenses, amortization, note number 2, 3,10,000.
3,10,000. Other expense,
Other expense, note number 3, 4,800.
and that's it. We don't know the total expense.
Yeah.
It's only a P&L extract. Is that fine?
Yes, sir.
And don't try to find the net profit, nothing. Okay, don't be so innocent. Don't do that. It's only a balance sheet and P&L extract. And that is all, guys. A very important sum. Please learn this for your examination. Trust me, it's really important. Okay?
Yes, sir.
Bye-bye.
Thank you.